analyst reports, and a list of Morningstar's top assets. Morningstar Premium also contains a stock screener and a portfolio analyzer. Stock Rover. Stock Rover is an excellent resource for stock research. There are 3 plans available: Essential, Premium, and Premium Plus. Each one provides various degrees of investing data, statistics, ratings, margins of safety, and other features. Many investors consider Stock Rover to be one of the best stock screeners. Stock Rover, in addition to assessing possible investments based on a certain measure, allows you to locate stocks based on what's known as Guru strategy. These custom screens are modeled by the strategies used by notable investors to research equities. Your portfolio will also be monitored by the Premium and Premium Plus plans. Stock Rover will offer prospective transactions as your portfolio requires periodic rebalancing. This extra set of eyes might be useful if you need advice on how to manage your portfolio. Investopedia. Investopedia is popular both among novice and expert investors due to its instructional database, market news articles, and investment simulator. New investors will value the free instructional tools that many free investing applications do not provide. You can get knowledge about investment words and strategies. You can even put your investing ideas to the test by making free simulated investments with a $100,000 starting amount. Before you spend your actual money on any of the investing ideas, you may test them out with paper trades first. You may also read market news articles to find out what's going on in the stock market and certain industries. These articles may also include a list of stocks that have benefited or been harmed by market occurrences. Investopedia, on the other hand, never suggests which stocks to purchase or sell. Investopedia does, however, have an online school where you may learn how to invest through video classes. All of the greatest investment websites provide how-to tutorials, but you might prefer this more participatory form of learning. Coming up next on our list is Zacks. Zacks offers free financial advice on possible investments. Zacks can help you uncover long-term and short-term investment ideas. To have access to the pre-made investment rank lists and in-depth analyst reports, you must subscribe to Zacks Premium. After a 30-day free trial, this service costs $249 a year. While Zacks Premium can help every investor, it's generally a better option if you follow a specific investing plan. The Zacks Stock Screener allows you to sort stocks based on growth, value, earnings surprises, and top industries. While Zacks offers a powerful stock screener, their ranks list might be a useful tool for locating stocks. Lists are available for several businesses and investment techniques. Zacks also provides a score for each possible investment. A higher score suggests that the stock may perform better as an investment. You may read in-depth reports on each stock in addition to the Zacks rank lists. These studies might outline the existing benefits and drawbacks. You do receive good research for $249 per year after the 30-day free trial, but keep in mind you will need to invest more money in order for your investment returns to pay the annual subscription cost. So if you're looking for your first stock, Zacks might not be the ideal pick until you've established your investment plan. Seeking Alpha. Seeking Alpha is widely regarded as one of the top free investment websites. You may also read articles from Seeking Alpha writers to receive investing ideas and market comments. There are articles that detail the bull and bear cases for a stock or ETF. These articles can be utilized during the research process to gain a better understanding of investment advice before deciding whether to purchase or avoid it. Seeking Alpha Premium, which is $29.99 a month, can help investors who make many transactions every month. Premium users also get access to a quant rating system, which can help with stock screening. The American Association of Individual Investors, or AAII. You may have gotten envelopes from the American Association of Individual Investors in the mail. AAII is widely regarded as a reliable resource for learning how to invest in stocks, ETFs, and mutual funds. You may also utilize their model investment portfolios as a starting point for developing your own investment portfolio. A yearly subscription is simply $49 per year. As a result, the American Association of Individual Investors is one of the most cost-effective paid investing research sites. AAII also publishes newsletters that focus on certain investing methods, such as dividend investing. If you enjoy your basic AAII membership, you might want to think about adding additional memberships later. Up next on our list is Barrons. Barrons is a well-known financial journal that provides daily market insights as well as weekly stock market recommendations. You may subscribe online. There's also a weekly print newspaper available. Barrons publishes 5 fresh investment recommendations each week from a team of independent stock pickers. Their suggestions reflect various investment techniques. These ideas, like the Motley Fool Stock Advisor, focus on company fundamentals, so you don't have to worry about making short-term transactions that require you to regularly monitor the markets. If you've ever read a copy of the Wall Street Journal, you'll recognize Barron's content structure. Both magazines are owned by the same parent firm. However, Barron's concentrates on stock investment, whilst the Journal focuses on business news and current affairs. Up next, let's talk about Kiplinger. Kiplinger is best recognized for its monthly personal finance magazine, which provides investment advice and money management guidance for people of all ages, especially millennials. The magazine's annual subscription is $29.95. Several columnists contribute monthly investment suggestions, and each month includes a special report on other stocks, bonds, ETFs, and mutual funds to consider. You can follow one of their investment lists or act on one of their new recommendations, KIP Dividend 15 and KIP 25 mutual funds. James Glassman's column is highly recommended if you wish to invest in specific equities. Each month, he recommends several companies or ETFs to buy in and discusses a new investment topic. As usual, do your homework before making a purchase to ensure that it's a suitable fit for you. Kiplinger's might not provide the same amount of in-depth research as some of the other choices on our list, but it is one of the top financial periodicals. And coming up last on our list is CNBC. CNBC is the most popular investment news channel. To save time and the expense of a cable TV membership, you may read their countless articles for free on their website. You'll discover positive and negative opinions on sites like Seeking Alpha. As a result, CNBC may be utilized as a research tool to determine the strengths and shortcomings of possible investments. CNBC articles can help you quickly assess if a stock is still a smart investment as you watch your investing portfolio. Because CNBC is largely comprised of news pieces, make sure you read both the bull and negative sides of any possible investments. Reading just bearish material may drive you to panic sell. Similarly, merely reading favorable stories may lead you to invest in stocks that are overly hazardous. When purchasing stocks, it's critical to consider asset allocation. You don't want one stock to take up too much of your portfolio. For example, if a single stock accounts for 50% of your portfolio's worth and the share price falls to zero, you lose half of your money. To reduce your downside risk, consider establishing a maximum portfolio allocation of 5% for any stock you buy. This implies that if you have $10,000 in your brokerage account, each stock stake might be as little as $500. Other investors may put up to 15% of their portfolio in a single stock. Make sure the quantity of stock you acquire is appropriate for you. Make careful to diversify your portfolio with each transaction. When investing tiny sums of money, you can designate a 1% or 2% allocation to each stock. If the stock falls and you have just a 2% allocation, you'll only lose a tiny amount of money. A modest allocation might also be beneficial when investing in riskier stocks with unpredictable share prices. And there you have it, folks. Now that we've discussed the 10 best investment sites for beginners, let us know in the comment section down below which one you're going to go visit first. Remember to always do your research and make the most of your resources. If you found this video helpful, feel free to leave a like and subscribe to our channel for more videos just like this one. See you in the next video.